Hi, good morning to everybody. I am Hamsar going to presenting industry specific business model taxation of banking business in Sri Lanka. Assignment 2 group assignment part of the corporate taxation subject group number 4A. These are the group members. We are in 5. The contents introduction, taxation impact, industry specific, issue on interpretation, challenges, ambiguities on questions, conclusions. Introduction. Taxation is the compulsory financial charge levied by government on individual entities and business. Purpose of the taxation is provide funding for public service such as healthcare, education, defense and infrastructures. There are two types of taxation, direct and indirect taxations. Direct taxation paid directly by individual and business to the government from their based on income, profit and wealth. This is cannot be transferred to others such like in income tax, corporate tax and wealth tax. Indirect tax applied on goods and service collected by intermediator from the business passed to the customers. This is affect consumer behavior and pricings. This is VAT, excise tax duty and custom duty. Taxation of banking business in Sri Lanka. This is regulated by Central Bank of Sri Lanka and the legal framework of the taxation, corporate tax from the inland revenue, value added tax on financial services, social security contribution levies, and complex interpretation and ambiguous wording pose compliance challenges. The taxation impact on the banking business in Sri Lanka, corporate income tax 30% higher than many other sectors. VAT on financial service 18% on value added activities. Social security contribution levy 2.5% on turnover subject to threshold. Other taxation is stamp duty and withholding tax. The direct tax is a redistribution from banking profit to support national developments, public service and social welfare. And banks also deduct and remit withholding tax from deposit interest. Indirect tax based on financial activity value additions significant for public revenue due to high financial volume in banks. Indirectly impact pricing of financial product and bank cost structure. Thank you very much. This is overdue to Dulanji.
Thank you, my friend. I'm Sitara, MBus number 122. In this slide, we are going to talk about industry-specific practical issues on the application of relevant tax laws in Sri Lanka. Complication of value-added tax application. Generally, in Sri Lankan tax laws, financial services are exempt from value-added tax in the line with international norms. This exception cover traditional banking services such as acceptance of deposit, lending of money, and the operation of current and saving accounts. Inconveniences with withholding tax application. In the banking sector of Sri Lanka, withholding tax on interest payment to deposits and service payment of to third parties has significant compliance obligation. Complexity in tax treatment on loan losses provision. Banking sector required to recognize impairment losses on loan and advance based on accounting standard. However, IRD allows deduct specific loan losses. Difficulty in applying transfer pricing regulations. Transfer pricing regulations ensure that transaction between related parties under IRD Act number 24 of 2017, banks have to maintain transfer pricing and comprehensive documentation. Stamp duty implication of banking instruments. In Sri Lanka, banks are required to comply with the Stamp Duty Act, which mandates specific duties on various instruments commonly used in financial transactions. Challenges with foreign exchange gain and losses. Foreign exchange gain and losses are significant and complex area of tax reporting of banks in Sri Lanka due to exposure to international market, foreign currency accounts, cross-border transaction and private instruments. Next slide will be continued by my friend. Thank you.
Thank you, Dulajini. I will be speaking about the crucial area in the taxation of the banking sector in Sri Lanka. The interpretation issues of a relevant tax status and act. The Sri Lankan banking sector operates under the complex web of tax legislation, including the Inland Revenue Act, the VAT Act, the Stamp Duty Act. However, one of the most persistent challenges banks face is ambiguity and inconsistency in interpreting these laws. Firstly, VAT on financial services is a gray area. While tax law exempts most financial services, it doesn't clearly define what falls under this exemption. With the growth of digital banking and fintech, banks are unsure whether services like digital wallets or app-based transactions are taxable, which can lead to compliance risk and disputes with the tax authorities. Secondly, there are income recognition issues under the Inland Revenue Act. Accounting standards such as SLFRS require banks to recognize expected creditor loss and accurate interest. But the tax laws often don't align. This creates confusion when banks are reconcile their tax returns with the financial statement. Thirdly, withholding tax obligations are often unclear. Frequent changes in regulations and the lack of clarity for non-residents payment or intra-group services make it difficult for the banks to apply the withholding tax rules consistently. Additionally, stamp duty laws are outdated in some areas with the rise of digital banking. There is uncertainty around whether electronically signed documents or automatically renew the agreement attract the stamp duty. Lastly, foreign exchange regulations also force the challenge, especially when the bank handle the cross-border transaction. Classifying these correctly under the capital or current accounts, the meeting reported requirement is often difficult due to vague legal guidelines. In summary, these interpretation issues and layer complexity increase the compliance cost and exposes banks to, legal and regulatory risk. Clearly, more modern legislation is essential to support the evolving financial sector. Thank you. The rest of the presentation will continue by my colleagues.
Thank you, friend. I am going to explain about challenges faced by taxpayer and tax administrator in practical application. The practical application of tax regularity statute in Sri Lanka banking sector present a dual set of challenges. First one is taxpayer and tax administrator challenges faced by the faced. The first one is challenge faced by banks. Uh, the ambiguity and inconsistent interpretation. Law often lack clarity, especially in defining financial service, foreign exchange gain or loss, and VAT application on new banking product. Second one is difficulty aligning tax law with accounting standard. There is a disconnecting connection between SLRF-based financial reporting and tax treatment, particularly on impairment and provision for non-performing loan, acquired income and doubtful accounts, and fair value adjustment. Third one is complex withholding tax requirement. Frequently changes are in withholding tax threshold and exemption, especially for the interest and service fees, and uncertainty on how to apply withholding for non-residents, group of entities, cross-border service. Fourth one is limited access to clarification and ruling. Absence of a structured mechanism for bank to obtain advanced tax ruling, official clarification. Fifth one is administrative burden. Compliance involves significant manual documentation and repeated reconciliation due to lack of system integration with tax authority. Next slide. Challenges faced by the tax administrators. First one is limited technical capacity for complex financial product. Some tax officers is like specialized training to assess complex banking transactions like structured finance and transfer pricing, and leads over reliance on assumption, blanket, and treatment that may not reflect economic substances. Second one is monitoring cross-border and digital transaction. Difficulty is in tracking foreign sourced income, digital service fees, online interest payment, or and like of integrated data system to verify cross-border income and tax residency effectively. Third one is inadequate legislative update. The pace of legislation reform is slow compared to innovative in banking sector. Administrators struggles to apply outdated provision to modern financial instrument and delivery channel. Fourth one is dispute resolution and appeal backlog. An increasing number of appeal and objection due to unclear law and inconsistent assessment. This delay tax revenues collection create uncertainty for banking, avoiding final opposition.
Thank you, my friends. I will be discuss the key legal argument related to the taxation in Sri Lankan banking sector, focusing on ongoing ambiguities. First, VAT exemption of the financial services. It's a long-term standing area for arguments. Primary fee-based services such as ATM charges, internet banking, and fees and credit card fees falls under VAT exemption, and also the ambiguities around the leasing services provided by the banking subsidiaries, whether these are fully exempt or partly taxable. The Court of the Appeal and Supreme Court have tried to clarify this, but the growing influence and the digital financial services made this involving issue. The next one is the applicability of the stamp duty on banking instrument. These are the legal doubt regarding the whether bank instruments are like facility letters, overdraft, renewal, and guarantees subject to the stamp duty. Although court have applied the rise of the digitally executed and automatically renewed instruments create challenges in the consistent applications. The third argument is the deductibility of the loss of provisions. Under Sri Lankan tax law, provisions of non-performing loans and the implement losses are questionable. Accounting standards allow expect credit losses, but tax law only permitted deduct the losses are actually incurred. Although the Supreme Court have ruled on certain aspect, uncertainty is remaining. The fourth issue is the taxation of foreign exchange gain and losses. Banks face difficulties between realized and unrealized foreign gain and losses for the tax purpose. Court have ruled in favor of the taxpayer in some cases, but the Inland Revenue Department continues to challenge how realization is interpreted. Next is the matter of the withholding tax obligation. There is ongoing uncertainty about whether banks are required to withholding tax payments on non-resident providers and intercompany interest and management fees, and also the dividend and interest distribution. While appeals have got provide some simplicity, consistent application of the WHT continues to create the challenges for the banking sector. Finally, we come to the reviewing of the amendment and transition provisions. Their issue is raised with the tax laws and change in time to time, and whether when then ambiguities provisions lead switching to one regiment to another. And so legal arguments continue to emerge as a law to update without proper intermediate simplicity. Now let's move on the conclusion of our study on corporate taxation in Sri Lankan banking sector. This study shows how important of the corporate taxation for the Sri Lankan banking sector, and it's helped fund government services like financial systems while supporting long-term economic growth. As the banking sector grows, especially with the digital banking, it's important to update tax laws. Recently, changes have helped to increase revenue and stable the economy and reduce the wealth gap. Overall, the banking sector plays the key role in the Sri Lankan economy and stable the growth. Thank you very much for your attention.